Today, the BNB is going into the fundamentals of cryptocurrencies. What I am going to do personally is going to look into Bitcoin and gold. Both of them are told to be the reservoir of money, where money is supposed to stay, a hedge against inflation. And I'm going to tell you which one of these is a better fundamental investment. We're going to be looking at the fundamentals of many altcoins. And then at the end of this video, my goal here is going to be telling you if you should be fundamentally looking into these investments. But remember, I'm not incentivizing you from buying any of these cryptos or anything. This is strictly for you to understand better what a cryptocurrency is and if fundamentally on a long-term basis these investments can hold over time. Because if you look at the last decade, crypto on the price action basis have been the best investment ever on mankind history. And now we are seeing a, let's say, a stopping that, because those coins are reaching higher and higher market cap every day. So it might slow down, and it will mostly slow down. So when it slows down, we can see a price action going down, and that's when you should be careful, because when market caps get too big, the money going in is going to be way lower than the money coming out, if it makes sense. But when you see Apple is a $2 billion company and you be like, whoa, Apple is too big, why isn't it dropping? It's not supposed to be dropping because it is creating value. And then on the other side of the spectrum, we have Bitcoin. Is it creating value? No. So we're going to be looking into the fundamentals of each and everything. That's going to be our goal today, for you guys to understand if it's a good investment or not. Welcome to the BNB, and right now we're going to compare gold fundamentals to Bitcoin fundamentals. So you're comparing something that's on a blockchain and that's something that is physical. Why are we making that comparison? It doesn't make sense. It does make sense when you think of it as a fundamental analysis. Gold and Bitcoin are both being valued at such high market caps because they store your money. They're a hedge against inflation. That is why big properties for both of these commodities, stocks, or whatever you want to call them. Gold is referred as a precious metal, and Bitcoin is considered as a cryptocurrency or a currency. It might someday be considered as a commodity. We are not sure, but let's get into the main point. So gold creates much more value than Bitcoin. The only value Bitcoin can create is it's money transferring online all over the world. So what it does, you can send money from one country to another country without any banks, any regulation, anything. It's very easy for anyone to send money all over the world. But when you do that with gold, it's impossible. So that's one thing Bitcoin has over it. It's more safer, as you can say. It's less easy to steal Bitcoin than it is to steal your gold, because gold mostly is going to be stored in a bank vault or in your house in a safe or somewhere. But the safety that Bitcoin can provide is on a blockchain, and for the past decade there has been no hacks on the blockchain. Nobody was able to decrypt this situation. So you can say that Bitcoin is a bit more safer investment when you consider it as the physical properties of it. Now when you look into gold, gold has generational value. It's been here for generations upon generation, and that has created its value. It's been here for a long time, and that has made it a cultural gift. So it's been embedded in many cultures, that gold itself. So in a lot of cultures, when somebody gets married, they give out gold as a reward, as a gift, and whatever. And now when you think about that, Bitcoin does not have that, unfortunately. The only people who are really into cryptos are these young folks who just got into understanding what the crypto technology is. So the generational value that gold holds is very important. Also, gold creates value for miners that have a job mining gold in those actual mine. Bitcoin does also have that, people that are mining Bitcoin, but let's say these guys are at a way lesser scale than the gold miners. So we have people getting jobs, we have those goldsmith crafting gold, we have gold watches being made. So many things are being done with gold that is creating value in the world. And then also when you look into what it also is doing with gold sellers. So for example, when you sell jewelry to someone, and then what he does is he resells it at an even higher price. But that's all price action, and we're not going to get into that. We're just going to get into the fundamentals. So fundamentally, gold is a better investment than Bitcoin. But when you look into the price action of both of these investments, you can see that Bitcoin is clearly the winner. It has done tremendous amounts of gain in this past year, but like I said, today we're looking just into the fundamentals. Now let's get into the fundamentals of altcoins. There is no fundamentals. Unfortunately, I've been looking into altcoins very, very much, and I believe these should be called modern day thievery. What happens with altcoins is someone makes a coin. He says that this coin is going to do this, and if it does, it's good. If it doesn't do, it's not good at all for sure. But what the principle of it is, they're all most of them, 98% of them are pumps and dumps. And if you're unfamiliar with that concept, it's somebody pumps up the price at a certain level, and then more people get in and buy that certain product for that exact price than the one who pumped up the price, who bought in so many things to get the price higher to at a certain degree that other people started buying that commodity because they saw it going up due to FOMO. He starts selling. He sells most of it. Price comes crashing down, and the people who bought in at the highs are the one paying the price, unfortunately. And that's what happens. So it's modern day thievery. People, especially young kids who know how to make cryptos and know how to market, just market a coin on YouTube, on whatever, and they say this gonna do. So I saw coin, shit coin. No, I saw scam coin, sorry. Scam coin was a coin that was made on TikTok to say, hey, just buy it. The market cap went up to $70 million. That's crazy. So kids are knowing how to fundamentally create value for them, but they're at the same time stealing from other people, and that what I believe is currently wrong with the altcoin market. And any cryptocurrencies, most of them are doing this kind of behavior, which I'm not at all saying that it's a good thing. In my opinion, that is very, very wrong, and we shouldn't be doing that. There should be regulation placed upon that. But for the government to step in and be like, we need to stop this, it's gonna cost them so much more money. It's gonna cost them so much that at this point they don't have enough incentive to buy it and to do that kind of behavior on altcoins. And I believe this at the long term is going to be very, very bad. There's something coming up, which is the Ethereum fees. If you want more explanation on that, I can do. Just leave it down in the comments. If you want more fundamental analysis of anything cryptocurrency, any altcoin, I can of course do that. I love to do fundamental analysis. That's what I do. That's what I live for. That's why Warren Buffett inspired me so much, because I look at it fundamentally, because something that creates value, in my opinion, is something great. That's something that's going to go on longer terms and be sustainable. Something that's going to make me passive income. That's what I like. I do not like things that are just going to go up, down, up, down, up, down, and have no value creation. That is why I prefer, and I've always been investing in the stock market rather than these other cryptocurrencies and other assets. I have some Pokemon cards, and Pokemon card is something I love. Personally, I've been a Pokemon fan. The franchise is amazing. I was a big fan of the Sinnoh League. If you do not know it, it's fine. And I'm a big fan of that, and that's for me something nostalgic, and that brings me value, and that's what brings value to others. So the sentimental value is something that I consider being a higher price over long term. So the sentiment is going to go up and up for Pokemon, because more and more people are going to get introduced, and then those cards that I bought are going to be less and less. That's what my fundamental analysis of Pokemon cards is. And if you want to know more and more about the fundamental analysis of that exact situation, please come ahead. Like I said, the price action of these coins can seem to be ridiculous. You might say, hey, these coins can make me a lot of money because they went up from this cent to this amount of money, and it's a 50,000% increase. But at the long term, like I said, if something does not have fundamentals, it's not creating, capitalism destroys it. And that's what capitalism is famous for. And now we have neo-capitalism also coming in. So you got to understand all this situation. Especially, it's really hard for new investor to cope with all these information in the beginning. So they just buy something and lose. Most of them lose money. That's why 90% of traders lose money, because they're not basing themselves upon fundamentals. They're just trading upon hype. Hype is something you should trade upon, but you should look into it very, very much. You should be very smart with everything you do. In my opinion, stay safe when doing that. So that's why I believe you should do as much research possible in whatever you invest and whatever you put in your money, especially if it's a substantial amount of money. That's why the BNB is here for you guys to understand that how to invest. That's what our channel brings value to you guys. So subscribe, and that's how we make no money, because we don't make any money. We're very poor people. Now that you've learned the fundamentals of these cryptocurrency, I recommend you guys watch this special video in which I teach how to make passive income through cryptocurrencies. The concept is called a liquidity swap. If you're unfamiliar with it, I would strongly recommend watching it.